Good morning and welcome to Friday the 20th of October. I trust everyone has had a good week so far, and I'm just going to try and do a mic check. So if the microphone is fine, please feel free to type that in either in the Discord chat or in the YouTube chat. So without further ado, let's do the disclaimers. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, good morning again. Let me triple check that we've got a few people live with us. Okay. Right, let's move on to the slideshow for today and have a look at what is coming up in this session and why I think we've actually got some more time than we usually do to take things slowly and go into things in depth. So if we look at the news releases, there are a few Fed speakers floating around. They're not all on this economics calendar from Forex Factory. You have got Harker outlined at 9 o'clock, and he's a major Fed speaker. You've also got the Fed budget balance, which is an ongoing issue. So apart from the Fed speakers, there is nothing major during this hour by way of economic releases. That does not mean it won't be volatile. We've got options expiry today, and we've also got an escalating war zone in the Middle East, and we have earnings season as well. So you've got a few different factors that have added up to quite a bit of volatility in the markets this week. And if we keep progressing with the slideshow, let's have a look. Okay, on the daily, we've got this trend line that we drew. It doesn't have to be exact. That's not the purpose of it. It's just basically to capture the approximation of liquidity on this way down, and that downtrend is intact. It's better shown on the Nasdaq one, where they've tested it a couple of times since it was formed. If it was formed up here, it's been tested 1, 2, 3 times and held. Okay, in the ETH session, we have toyed with yesterday's low in ES, which is very, very weak. The fact that we are still in that range, centering on yesterday's low, not a very bullish sign so far. And Nasdaq exactly the same, just really hovering around yesterday's low. For the heat map, I've chosen the entire week, so we can have a quick look at the individual sectors involved. And what is pretty obvious just looking at that as a whole is that this weakness is widespread. We've got the big techs over here. You've got the finance players like Berkeley B, or Berkshire Hathaway rather, and you've got the healthcare sector. That's really, if you look at the healthcare sector, that's the only really positive light in any of this. So the weakness is across the board. Okay, and the final slide I just wanted to show. I did show this the other day, which is sort of a lot of where I do some trading inside Sierra. I just want to show I do eat what I preach. Or I'm not quite sure what the exact phrase is, but when I'm talking about delta tails, I'm talking about volume profile. Yeah, I do actually watch it myself in every platform, so it's not just in Bookmap where I'm talking about it. Okay, we've got 5. Feel free to type in any comments. Let's get back to the display capture. Okay, and so the theme on the educational side, or basically we can do some live order flow analysis at the same time, And maybe that's where we start. So if we have a look at something that I did just screenshot and put into the Discord channel a few minutes ago, this is something that we see regularly, absolutely regularly, in ES. And we're talking about a resting iceberg where they haven't had their complete fill, and it's a sell iceberg above the market. And they placed, I think there was about 165 contracts filled there, or maybe it was, no, that was it, because it wasn't touched again until here. And then the market moves away. So once it moves away, and it's moved significantly away, you're looking for a trade. If provided you get a multiple R opportunity, you're looking for a trade back to it and through it. And that's what happens many a time. That's why why I flag these to you. And again, I tend to focus on these resting sell icebergs that are above the market rather than the resting buy icebergs below the market. And the reason for that is that the probability of them being tagged is just higher than the other way around. Okay. I just want to check, just with anybody on YouTube, that I've got a slightly higher resolution on the monitor here, but I've increased the font size of Bookmap that you can actually all read the numbers. So if I'm pointing at 4295 there, that you can read it. If there's any comments, feel free to let me know. Hey Marius, how are you going? Welcome. Right, okay. So why have I got 3 of these, and why have we got a slightly bigger resolution? It is because I want to talk about things in a little bit more depth today, because we haven't got to speed along at 100 miles an hour before a major 830 release. So one of the things that I keep harping on about is times of the day, right? And I thought if we have this TradingView chart open on a 5-minute chart, and we make it pretty small so that you can see each of the days, like there's today, yesterday, the day before, and you can do the same in NQ. It just gives you an idea when I talk about what are key times in the markets, because you can see across 3 days, and I can always drag it across or scrunch it up and make it easier to see 4 days. So what I want to talk about is really the types or the whens of the opportunity that is present in the ETH session, right? What are we trading? We're trading ES and NQ futures, which are based on stocks, or the futures of stocks, or futures derivatives of stocks in the US markets. The US market shuts effectively at 1600 hours or 4 o'clock Eastern, which is round about there and there, etc. So we have this great big ETH session here, and let me see if I can let me draw it with a blue pen. So if I draw it, I'll just do it on this yesterday profile, because you've got all of it. Come on. And so yeah, so the ETH session that we are talking about really spans from here all the way through to here, right? And what we have to be cognizant of, what we have to be well aware of throughout this process, is that the main US market where these stocks are traded is effectively shut. There are some pre-open times. There's a post-pre-open here from 1800 through to about 2000, and there's a pre-open which is really about 0400 through to 0930. So in other words, you've got this little session here, and you've got this little session here where it's sort of open, right? But I would say for the most part it's dead. I mean, there is some information you can get from the pre-market activity of those stocks, and I'd say it was more in this session rather than this session. But let's just get rid of some of that so we can just focus on these times again. Yeah, and I'll explain, or rather it'll become apparent why we are looking at this. I think I've gone slightly past that 9:30 mark, but anyway, so the ETH, the one that we're talking about, extended trading hours, opens at 1800 hours. So whatever activity occurs from 1600 through to 1800, including when the market is actually technically closed, is what I would call in NFL terms as garbage time. Right, they might be cleaning up a bit of business, but it's really garbage time in the sense that they send on their second or third string quarterbacks and the game is effectively over. If you look at the size of the trades, all the really, really large trades ended at 1600 hours, and this is effectively nothing or nonsense. The only real exception to that is during the earnings season, where you often get some major stocks announcing their earnings just after the market close. And obviously the other exception is when you have a force majeure event, or in other words, if a war breaks out, that kind of event. But for the most part, this is just garbage time. That is not a period that I'm willing to trade at all. Right, okay, and let's just remove that. It's quite nice being able to go slowly for a change. Okay, so the next period is 1800 through till 1945. Right. Asia is technically open, so the futures markets have reopened at 1800 hours, but none of the actual individual stock markets that have lots of activity, such as Japan, are actually open during that period. Again, it is extremely risky. You tend to not get tremendously good action, and there's no correlations or confluence with other markets during that period. So it's really just games during that period. So you can get moves, you can get moves up and down, but there's just games going on, and there's nothing that I would call really good flow type action to analyze and to get a repetitive edge in the markets. It's a little bit random. In fact, it's more random than it would be at most other times. So let me just use the rubber this time, and we'll just rub that out. Okay, and let's go here, and then my zeros looking sort of like triangles. Okay, I would call this the first real opportunity to do normal futures type trading. At 1945 Eastern to 2045 Eastern. This I'd call the opening Japan phase. And that's where I'd say you get repeatable action, right? So looking at this chart over here, because I've scrunched it up so much, you can't really see that you get some really good moves. But maybe if I remove all of this, so if I just ditch all of this for a second, and we look across in this period, 1945, and we'll just do it yesterday. So I'm just doing ES, even though I know that NQ trades better, and the scaling here is automatic, so it's going to get bigger and smaller without me really controlling it, unless I do something like that. But essentially, if I get my pen out, I'll just do it with my mouse this time. This period here, even though you can't really see it from a 5-minute chart, does have reasonably good trading opportunities, right? And I'm going to talk about when the better opportunities are in ETH, but I'm just saying this period, if I was going to rank the periods that were tradable on a consistent, repeatable basis, this would come at the bottom, but it would still fall into that category, all right? And then the next one, you write it down. The next one, really, the second one, I would say would be the 21.15, that's really, it's not really grabbing me. I think it's not really doing palm rejection very well. Hey, Stephen. 21.15 to about 22.30, 22.45. This may be getting a little bit late for some people that live on the eastern shores of the US. But you've got plenty of night birds as well. And you've also got plenty of people from the West Coast who that kind of time really doesn't look very good. Let me just rub that out again and try again to write that down. Doesn't like my handwriting today. 21.15 to 22.30. That is a slightly better category. You'll find that the volatility is higher than at the Japan Open most days. And you get some really, really good reversals in that period. So I'd call it an open period of 21.15 till about 21.33, 21.35. And then you've got some more regular type non-opening price action, and that can keep going all the way through for another hour, hour and a half. So I'd say, I'd say those are the two periods in Asia that are tradable on a repeatable basis. And I'm not talking about sudden random phases that might just crop up during the middle of Asia, or one day a week, or 1 day a month. I'm talking about things that are repeatable on a daily basis. But the other thing to accept is that you cannot control this, you cannot predict this, and sometimes it's just going to be incredibly dull, and the trades are not going to move at all. But I'm just saying, if the relative volume is reasonable, both that Japan Open and this Chinese opening stretch, as I could call it, are tradable. All right. And then I would say, let me just get rid of all of that, that it becomes completely dull until, let's draw it in here. Whoops, we are not on a pen. Until this period here. And I'd say you've got a period of I'd call this like an Asian afternoon pickup. So you might get really, really good reversals in that hour, 50 minutes. And that's a prelude to the real action, and where the real ETH action comes into play, which is at that time there 0150 for the German Open. And recently, the action has really been tradable all the way through from that 0150 right until the US Open. So I was saying that the next session, which is the really good long session, is when the Germans come on board, and that's when you get the real price action. So if we get rid of all of this, so if you are an incredibly early bird in the US, even if you aren't up for the London Open, you're likely to find a good stretch of trading at some stage from that London Open or from the German Open all the way through to the US Open. So you might just you might just be willing to sit at your desk for 2 hours during that. And the later you get, I mean, really from about 0600 hours until the Open, you get some really consistent type action day after day after day. So that's just one of the things I wanted to go on in a little bit more detail than I normally do on how you break down all of this. And some of those periods may be completely irrelevant to you. So before we move on to the next thing, let me just ditch all of this and go back to that, and we'll just watch this breakdown. So I always do some live order flow action, so I will have a look at it again. So a bit of hindsight analysis here. We saw that this sell iceberg was to grab people's attention that they wished to trade up here. So essentially that what they wanted to do was to grab some more buyers as fuel to then take it down. And if we let me just drag this across so we have more of the ES. And if we look across at this resting liquidity, this liquidity has been placed since 4 o'clock, which is the pre-open for the US stocks that we just mentioned, an hour after the London Open, and you've got some even earlier resting liquidity there, just a little bit lower. So there's been a game in play since the last time they got down here, which was they'll make some money squeezing these late shorts, take them all the way up there. Then once it's at a really good price and they can take their stops of those buyers, then they'll drive it all the way back down, and we're now heading towards that magnetic resting liquidity. And the reason why we have these two markets side by side is so that we can see the action. I mean, you can see in NQ, I know I've got a slightly shorter period there. It's a really, really good trend channel down. I don't even need to draw it for you. You can see that how beautiful that channel is. You don't often get that, and you might go back to some historical teaching of what trend channels are. They aren't often as as beautiful and linear as the movement down from there all the way down to there. This kind of action, up down, up down, up down, is much more likely. That's why a lot of that indicator stuff does not work, because that is not how markets work. No questions, no comments. Okay. What time is it? 8:21. I said the Canadian releases at 8:30, but it doesn't really cause us much consternation. So we're zooming out in NQ, and we're looking at these resting liquidity bands that they've placed. And you'll note that they basically place them at the exact same time. So if I look at the highlight of the cursor, D53, just looking at the time, because so effectively you can see, I was struggling to believe it was that early. It was just before the Chinese Open. So again, that confirms one of the things, one of the reasons why we look to those times, because that isn't just when those markets open, it's when some of these large players become active and they place these advertising orders in the market. These advertising orders are often hit much, much later than they're placed, but it is still interesting to see when they're placed and how long they remain in the market without any major dilution or adding to. And you can see these three bands here have been in place for a very, very long time. But what can happen, as has just happened here, is that they can take away a very large band. Sometimes, if we zoom down, you'll see them move that band. On this occasion, that is not what happened, but it's just interesting to know. We cannot know why that large player removed that large order. And of course, the whole thing is polluted by these algo bands, which make it very hard to see anything. But there's still a large resting liquidity. Again, in NQ, since I'm doing things more slowly again today, we are looking at resting liquidity levels normally over 30. So when we have a level over 60, and it's been in play for a long, long time, and it's also been approached once, that is of interest to us as market-generated information that may provide a useful target on a move down. So the market does whatever the market feels like. It doesn't normally move in this straight line like this, but that could be in play for a trailing target at some point. Especially when you have, looking across at ES, some interesting resting liquidity below as well, which has been in play since the German Open, that one. They added to it at the German Open, and that one, it stretches back off my charts, but effectively that's been in play all of the Asian session. So, these things you have as markers on your chart, so you don't think at any point that they're going to go straight to them, but they're just markers that can come into play and are likely to get hit at some point. So it should not be a surprise to you, after a big, strong run up, that suddenly they start targeting this, and then bang, they're going to hit this one here at 4285, it looks like. Looks like they are just removing some of it. Let's zoom right out so we get all of the order book levels. They're coming almost to it. I mean, when you're trading to that as a target, please remember that your risk to reward equation changes throughout the course of your trade. And if you were in a trade all the way down to here and it didn't quite tag that, there is absolutely no harm scaling or taking it before it does hit it, in case it doesn't hit it, because the risk reward will become quite unfavorable to you if you then let the trade retreat backwards almost to your entry. So this is quite a big move down. We're in an economic climate where things are not as good, and we have two wars on the world stage in play. So it's not entirely unforeseen that we would have a bearish week, although there have been plenty of games. I'm just watching this for a second, seeing how these levels move. I'm also looking at the tails, so I'm always looking at these tails. I don't always look at these levels here. The ones at the bottom are just the total volume of the sellers and buyers in this column here. I don't get much out of the numbers. Sometimes I get some information in my head from the visuals of the length of the horizontal bars in relation to each other, i.e. the ratio of the red to green or vice versa. And it does change if you move that around. So, if I zoom right in, you'll see those numbers shrink and that ratio might change as well. Some of the other things that I did have on when we started doing these webinars, I think they distract from what I'm trying to show during this hour, so that's why I really haven't got many of them on at the moment. I think they're great tools to have, but for this purpose, just trying to see things as clearly as we can, I think essentially the heat map, this market pulse, which is the volume and pressure imbalance, is really quite good. The market stops can be useful, but I have filtered them down considerably. So there's far fewer triggers to actually show those market stops, and the icebergs are not filtered. So basically every single iceberg is there because I'm not using them as support and resistance, and I'm just using them as information, and sometimes I'm using them as targets. Okay, so we've just had a little bit of a look at the action there. I haven't done an awful lot of live analysis. I mean, when I did that screenshot of that there, if you go back to what I said in the last webinar, or the last time I screenshot one of those and then discussed it live in the webinar, it is often the case when they've got these sell icebergs above that they're using as these targets, that they're looking to fill lots of buyers as fuel for a move down. And sometimes you get information from the heat map as well. So like if there were many, many levels up here, so they're trying to get as many fills as possible before this move down, that could have been helpful as well. But on this occasion, there weren't that many levels. And if we drag this across, if it's going to behave, and we look at the green tail towards the top, you can see that you can actually see a distribution on that delta tail as well as the distribution on the volume profile. But the actual the marker here where that iceberg was the big point. So once it got down there, that was the real, beginning to roll downhill moment towards these liquidity targets down there. So that's how you'd use it. You could see them potentially lining up all these buys as fuel to go down because they'd set these resting liquidity levels up beforehand. You had more of these American traders coming on board as we head towards the 9:30 mark. So that if they've had these resting liquidity levels here all night, at some point closer to that 9:30, they become more and more in play potentially. And that's what can happen. That's why I like to see how long they've been there and whether they've changed in their intensity or not. but most importantly, I also want to see the number of orders attached to them. So I'm not just looking at the colors, I'm looking at the numbers. Right. Okay. So we've looked at the concept. I'm going to move back on to this whole slow method of looking at what we look at when we work out what we're going to trade in the ETH session. So I'm going to drag across the TPO VP chart that I often do. I might make it a little bit bigger. Come here. Right. And I drew this. I drew this when I got up this morning, which is sometime just after the 1800 hours. And what I do again is I split the previous session, which is the white session, which is the RTH session, up to find out where the last value was, right? Because that, and this RTH session for me ends at 1600 hours, i.e. at settlement. So that last value was the last real value. That's why I've got it there. And you can see here this accumulation of time and the volume there. And then when I reset the chart, the reason why I drew it across there was that it was an approximation of the value as closely as I could get. I'm looking for where there's a break between two distributions, and that was the closest thing I could find it to a break. And I drew it all the way down to the bottom because it looked to be exploring at settlement. So one of the things that you'll often find as well, where they do have a strong directional move into settlement, is that there is likely to be some level of continuation into the early Asian session. So we're talking about the session being at 1800 hours onwards. So if we then break down this one into what happens, you can see that it gapped down. So if the 1600 settlement was actually up there, where the red triangle is and the T+1 is, and the opening bars of the RTH of the ETH session were down here, there was a gap down. So in other words, there was a continuation of this directional move down into the close, and that left something which was quite nice. It's actually even nicer on the NQ chart, and we'll have a look at that one in a second. But that meant that we were trading down here, and that the last really fat distribution was up here. So there was always a likely opportunity in terms of auctioning to have what's often known as a coat check or price check, which is to price check this value zone up here to see whether people are still interested and think this represents good buy value, as in, is it not too expensive? So even though we started down there and we moved down and we went like that, the likelihood is, let me draw it, that this little zone here was always going to be very, very attractive for them to come back and check. And you can see they went a little bit higher. So that is something, it goes hand in hand with some of the stuff that I talked about, the times of the day and then which markets are open. We're going to look at that as well in a second, just because we haven't had a recap of this whole concept for a little while. And today is a good opportunity, especially because, options expiry is a risky day in RTH. So you've got to be aware of that. There can be some nasty price type moves in RTH that are just completely unpredictable chop because people are trying to hold price in a certain area where there is options positioning. Okay, let me just get the NQ one. Let me get rid of all of that. Yeah, Stephen, thanks for the question. Trying to get rid of this. I just mean that you can see this delineation point, a low volume node, whatever you want to call this. It's where the profile and the thick line there is the volume profile. Yeah, the LVN, right? That is the point at which this new distribution started, right? And here's another one, right? So this is the first one that they want to go and check. So they basically ended this distribution there. They moved into a new distribution in ETH. But at some point they want to come back and check because this is much more important than this. RTH is much more important than this ETH rubbish. I trade rubbish, but that's because I know I'm trading a casino. But they want to come back and see whether this distribution could be valid again, if that's a kind of phrasing that you can understand. Is this distribution still in play, or have we definitely finished with that distribution for the time being? Yeah, so that's all they're doing. And that's what we call a price check. I think Tom calls it a price check or a coat check, like a supermarket price check. It's just advertising this price here. Is this still a price that you're interested in? So they come back, check it, and even though they looked like they were interested, they weren't, and we've moved back down, and we're all the way back down here. Yep. Yeah, you got it, Stephen. Yeah. Okay, so it's actually better shown on the NQ. Some people are very reluctant to touch the NQ, and they don't believe that it auctions well. But if we drag it in and we make it a bit bigger, you can see this even better in NQ. So if we let me just show you how that ended. So that ended again with this distribution. So if we reset that, so I drew it because, why did I draw it like that? Essentially, there was an LVN there, and they had a big move down, and you can see some distribution from that LVN down all the way down to the bottom. And because NQ in volatile times tends to have really, really large ranges, that's why I drew that purple value for ETH, prospective value, all the way down there, right? And if we look at what has happened in, and we can split this one out into bars again, you can see that if they've got this little distribution here, and we can draw this one again, if they've got this distribution there, you can see they had a price check up here into this distribution, and they almost tested out this, which was the peak volume of that distribution. It's as close as in NQ. You can see the resting liquidity is around there as well. So that's just interesting that when you see some nasty spikes down during Asia, that you might get this opportunity, certainly early in Europe, to have that price check kind of drive up. And again, you don't need many great multiple R trades to get down. And we can look at the I see what you're saying, Stephen. And we can look at the action in Bookmap for this spike up, because we have this as context and background in the early Europe, and we know about this distribution, so we can grab that NQ Bookmap chart and have a look, and we'll look at the time that was in, and we can see that from the trading view chart. So we'll do that. So we'll get rid of the TPO chart. If I get my cursor back, I know there's some action going on, but there's always action going on in the markets. So this time we're going to blow this one up, and we're going to look. In fact, maybe I'll just get the. I'm just going to grab. What I'm doing here is I'm looking on the trading view chart to see when this drive or this big spike down was, which was essentially just after the German Open, and then it drove all the way up into 4:45, 5 o'clock a.m. So let us have a look at that. So it's really about just after 2 a.m. And I've made it the whole screen so that we can easily drag this across. So we're going to have to zoom out again. And bear with me while we do it. I have to zoom out again and again. We know that low is the point that we're interested in, and we're also interested in the range. So we're going to zoom out back in again, but we're going to zoom vertically on this. Why are we looking at such a high level picture? Because you get better context from that picture. And remember, we've just looked at the volume profile and the time profile. So bearing that in mind, and we're looking at this resting liquidity, and it's been there for hours. It's well above the 30 level that we care about. 58, 98, 94, whatever that was. Can we find out? Yeah, no, it should be higher than that. I can't really find out, but that would have been higher as well. So that gives you context as you come down to this. And remember, if NQ doesn't quite get down to a band, we accept that it is a very thin instrument. So if it only just got down to there, that's almost going down to here. And there was a liquidity band there that it turned around. You can see them increasing the intensity of that, or support, as you could call it in liquidity terms, a few times until it finally rejected. All right. So you have that in mind. So let's zoom into this kind of action, which is, so we've determined that there is, despite all this action going down, we've determined that there is a possibility, we're not going to call it a probability at this stage, a possibility of a coat check or a price check up above, to look at the previous distribution that took place in RTH, right? So that when we come down to here, which is, early in the German session, but I said that recently this entire period from about 150 all the way through has been busy. So it should not be a great surprise that, if you have been trading this, to see volatility during that time. The London Open may not be till 3 a.m., but we've got, good volatility in NQ there. So what are we looking at as we come into this? So we zoom in a bit. I've got one of those Australian flies that has appeared in my office. Very painful. What we are trying to do here, one thing I'm trying to illustrate first off is the tail, the delta tail. So you can see on this picture, I know we've got quite a lot of action all the way in from about 153, but what is that showing you? That is showing you that this is like a 90% delta tail. In other words, it's more sellers than buyers at every price level on this way down, and it gets a little bit thin on the volume profile right at this bottom. Let me just get rid of that. Go back to the cursor. Right. Here, the actual bars of this thing, that's one of the reasons why I don't look at it too much. It doesn't really help that even though you've got 2,731 versus 18, so basically 3 to 2, which is a big imbalance of sellers to buyers, it's not really shown in this graphic here. So yeah, I have an issue with that, and I must bring it up to the developers. But then if we zoom right into this, and this is just trying to get this, this is to look at how scary it might have been and where you might have got in. Okay, we've almost got it. I think we have got it now. Right, so you've got plenty of plenty of MBO stops. You can see 67 there. You see 69, 71, whatever number that one's, 34 maybe. So you can see them driving down, right? What isn't normally the world's most sensible idea is to fade these, right? Simply because you don't know which one of these spikes is going to be it, right? So we're looking for more of the SD, type A or type C category. If I call type A and B basically the same thing, which is just a test of a previous swing low, and type C is that failed breakout beyond the extreme. So what are we looking at here? Remember that when we're looking at this, we know that there's a potential for some long-term trading targets way above. So we know that, that even though this may seem crazy, that some of these trades might be worth it if they do get going. And we've got to look at it right at the lows. So again, we are really quite focused on these tails. We're focused on the liquidity acting as support. We know that there was even more, much bigger liquidity which wasn't tagged, or maybe it just had been tagged, but it hasn't been tagged for hours and hours, right down the bottom. But this is significant support in NQ terms. 60 is twice 30. So if I'm interested in resting liquidity of 30, if I see 60, I'm definitely interested in that. And I don't have to always see it tagged. If it comes close, that's good enough. Okay. So I'm seeing that as potential support. Then you're looking at, have we got a significant tail? Have we had a big rundown? That's a massive tail, right? In terms of if that's all red. So that at some point it's going to be worth taking a supply demand trade. And then you have to think about the risk coming into this, right? So essentially, I'd have to dig the pen out just to make this one a bit easier. The pen is struggling with palm rejection, so I've got to be careful I don't touch the pad, because that's the problem I seem to get it. So I'm saying that this is essentially your support, so that your stops are going to be around about there. Your stop is not this one, right? That's too wide a stop for what we're doing, right? Why is that too wide a stop for this purpose? It's because we're looking for a multiple R type trade. So, we're not just looking at Bookmap. So we've got TradingView, we've got whatever we've got, like I've got stuff in Sierra. We've got, very importantly, we've got the volume profile chart with us to give us ideas on targets above. And we've got those resting liquidity levels up above from ES as well as NQ. So we're saying that, you're in there. It's a retest of these. And, if we get to the cursor and we zoom out, we'll have to get rid of all of that because they're all in the wrong position now. We then get into the microstructure. And so we start getting down to the 30-second time frames on these bars here. I do hope the font is big enough that you can see them. So, if I read them to you, it's like 2:20, 2:30 onwards, right? So you're looking at this microstructure. You're saying, are we testing the lows here? And, do I have a risk point where I'm wrong? And you have a risk point where you're wrong here. So then you're drawing in your risk into this on the basis, of the trigger being the fact that they cannot, they've touched this and they've touched this, but they can't get any further. So you're stalking in this zone. You're aware it might not get back here. It might not be the type C, so that you might have to get in here. So the fact that they cannot then get lower and they start to move higher, where is the most likely place you're going to enter? It's probably around about here. So you've got a risk point. Let's just draw it all the way up here down to there. So, and then you look across to work out your risk point. It's really about 14,798 to 4. It's not going to be 5 points. So you're going to, if you looked at that screenshot that I did earlier of Sierra, the only thing I've got marked on that is rotation size. So the only real reason I've got that there is to give me a guidance on stop size, that, when I'm thinking I have worked out where that stop should be, that I've roughly got the right size in relation to the swing sizes. But because I think, 4 or 5 points is too small even for me, 6, 7 points, that kind of order. And then that's an interesting trade, because you've got something fairly concrete in your mind. In fact, 6 or 7 points is a little bit further down here. So if you took 7 points, it is worth it. Why is it worth it? It's worth it because even your first target, if we look at the volume profile, it was very, very skinny all the way down here. And if you're looking across here in terms of any real balancing action, the last time they had any real balancing action was really around about there. You can't really see the volume profile very well on this. I'd have to actually make it a lot bigger. So even if I made that a lot bigger, it's still, no, it doesn't. It's not the most attractive, so I won't do that. But it's up there. And you've also got these breakdowns of resting liquidity, which are often very, very good points for targets. If you've got a resting liquidity that's broken, they'll often come right back to it. And you've got 2 here. You've got 1 and you've got 2. So if we zoom back in again, we zoom right in. So I'm saying that we couldn't get back in. You're in there, and you've got, that's too small to be a decent first target. But you've got this one, and you've got this one. And then you've got some interesting targets above. And if we go back to TradingView for a second, and we look at where we were in relation to that, when we were down here, we're off the 1/2 standard deviation from VWAP. And you've got things like, you've got yesterday's low, which is this red line. You've got VWAP itself, as well as settlement, which they almost tagged. So you've got wider targets, and you've also got the ability in yourself to accept that you are happy to take your stops and be wrong, because you know that you might have to have a couple of goes at really, really good structural setups to get a trade that can take you up at least to yesterday's low. So, you can't forget the context in which you are looking at a trade. Even though you're looking at it on this microstructure level, you've got some context from much bigger levels to look at as real targets, realistic targets. Because whilst the microstructural auction is incredibly useful when you're looking at what is happening in the here and right here and now, it doesn't necessarily cover what's likely to happen over the course of the next 15 minutes, half an hour, because they're going to have lots and lots of those microstructural auctions, which may go in various different directions until we get this move, which went zunk all the way up to settlement. It was still a lot of nonsense up and down until that move got going. And you just have to give your trade a chance and accept that it could get stopped out. Okay, we'll just get that across. Might have a look at the live market again. What I didn't really cover was the other markets that you're looking at. But as you know, because you'll have heard me say this time and time again, when you're in Europe, in fact, let's go back to Asia. And I won't write this up, so we'll just have the action that's going on in Bookmap, and we can talk about anything that is really, really of any great note. In Asia, in terms of correlations, I won't talk about big players. I'll just talk about correlations first. The correlations, what's driving the markets? You've got the Japanese stock market. You've got the Japanese central bank or interest rate, etc., or Japanese bonds affecting currencies. So the easiest thing for you to see as a retail trader is the impact on currencies. And that is often reflected directly in the USD currency pairs, like the Japanese yen, USD in Asia, or gold, right? So, you can have a look at some of the other stock markets in play. Have a look at China, have a look at Japan, have a look at Australia, have a look at Korea. So, there are some correlations. It's not the best time of the ETH session, but there are things that can help you with the broader picture. And when you're in Europe, you've got more interesting things. So you've got a much better correlation, and you can do the statistical studies yourselves on working out what the current correlations are, but you can have a look at the DAX, the Eurostoxx, the FTSE, and in particular, where are each of those markets as they open in relation to yesterday's high, yesterday's low, yesterday's settlement. All of those things, can be really, really helpful with you, and also you can get much better volume and volatility. I haven't done an actual direct volume comparison on like a volume per 15 minutes in Europe versus in Asia, but I'm guessing it's at least double in Europe than it is in Asia. So those are the correlations. And in addition to those, you've got the euro. So you've got the euro futures or the EUR USD currency pair, and you've got the bond, the FGBL, and you've got crude oil gets a little bit more active in Europe, and you've got some good correlations that are often in play in the European session between crude oil and the equity indices futures. You've got more information that's helping you, and you've got better action, and you've also got this let's tag settlement in each of those markets kind of thing in the equity indices futures markets, which doesn't happen as well in the Asian session. One of the reasons why it doesn't happen, the go home kind of trade that I've talked about, and that I think there's a Bookmap webinar by my friend David as well, and he's talked about this go home session where ES and NQ will go back to their home point or their settlement from yesterday point during the London Open. The reason why that's not so useful in Asia, or the most common reason why it's not that useful, is because they haven't traveled very far from home. So it's such a short distance to get back to home. Oh, question. Thought I had a question. Or maybe I have to open chat. Oh, there's a chat in the room as well. Somebody's asking, do I see you going down further? I don't predict the future. I can look at what's in play. If you look at, I think one of the things I've already said, Skookie, is that this is options expiry day. If you look at the various options expiry days during the year, this is not one of the major ones, but it's still a significant one. So it's a monthly options expiry day. So you've got monthly options expiring, weekly ones, and some of those ones that are about 2 days. So the biggest options expiry days are the quarterly ones or the quad witching days, which was like last month. But because it is an options expiry day, one of the most useful things to do is look at some basic information. Look at the open interest in the SPX options, for example, which is the most heavily traded one in the sphere, and the SBS and the SPX options do have some bearing on NQ futures as well as ES futures. And you look at the levels that they might want to peg them at, and if you did look at that, you'd find some. So I'm looking at the current spread between SPX and ES futures, and I think it's 25 points. So I know when I'm looking at this, for example, 25 points off this is still above 4250, and there's some OI of interest at 4250, which would be about 4275 in ES. So yeah, I do see it checking 4275 at some point. Maybe in this zone here, but whether it'll go down any further, I haven't got a clue. And again, I've learned that you don't get paid by predicting the future. You get paid by coming up with ideas on what may happen, but you get paid by taking high expectancy trades that have a reasonable level of probability. They don't have to have 100% probability or even 80 or 70% probability, but there has to be a good reason why. If you've got a set of triggers, you're looking, I think my friend Yuri calls them fingers. How many of those fingers or confluence factors of your triggers? What's your most important one? And one of the most important ones I've talked about is this fuel factor. This red tail if you want to go long. Often combined with some nice liquidity support. What factors have you got in your triggers that suggest that this is a good time to execute this trade? And how much risk you take in relation to how much reward? Are you going to get you're going to get the 2 hours, 3 hours, 4 hours? If not, why are we doing it? If we're doing it just because we think price is going down, that's not a good enough reason. You can be wrong an awful lot and still make money. In fact, make more money than you lose. So what I'm trying to say is that my analysis is pretty much irrelevant. What is more important is that I stay in the present, that that I see things as they happen, and that I've worked on my prep and my homework for the kinds of things that I should be looking for in order to get the types of trades that I want, and that I basically execute them without overthinking it. Or if I think, for example, oh my God, it must go down to 4275, but we're here, and I suddenly get a great long. I have to take that great long, because it's in my trading plan. It's got a 2 or 3 hour or whatever it is. Even though I think, oh my God, it's definitely going to get to 4275. That's irrelevant. I can't predict the future. I am so not Nostradamus. And all I can say is that I've spent way too many times saying, oh, it must get to 4275, and then not taking those great little longs. So I don't do that anymore. I accept that the process the process that you build in your trading plan, hopefully you will find, is a much better trader than you are a predictor of the future. As long as it is the best trader you have, your process, that's all you need. And all this rubbish about all these people always being able to work out what's going to happen next, good on them, but it often means they're not telling the truth in regards to their actual trading. And yeah, that's kind of a very long-winded answer to that question, but I hope it wasn't a bit over the top. What time is it now? It's gone 9. I think it is coming up 9 o'clock. We've got 7 more seconds. So let's just zoom out one last time and have a look at this. So you've got the biggest resting liquidities are below. They're actually below that 4275. Who knows? Maybe we will get down there, but I don't know. Well, good luck to everybody who is trading tonight, and be wary of options expiry. Be very, very careful. Thank you very much for coming along.